Imagine waking up tomorrow morning. You grab your phone, open your investment account, and suddenly thousands of dollars are gone. The stock market is falling, financial news channels are panicking, experts are arguing, and everywhere you look, people keep repeating one word: bonds. But here's the strange part. Most people don't know what bonds are. In fact, many people spend their entire lives earning money, saving money, and investing money without ever understanding the market that secretly controls everything. Stocks, interest rates, mortgages, business loans, even your savings account.
Hi, my name is Zaid. After watching this video till the end, you will definitely gain so much knowledge that you will understand what bonds actually are, how bonds work, why understanding bonds is important, and so on. So let's start. And subscribe to my channel for more informative videos like this.
Today, I'm going to tell you a story about money, a story about fear, a story about one of the most misunderstood things in finance. And by the end of this video, you'll understand why smart investors watch bonds before they watch stocks. Let's begin. Meet Zaid, a wise kind of man who spent decades working hard, saving every extra dollar, avoiding unnecessary debt, and trying to build a better future for his family. For years, Zaid followed a simple rule: earn money, save money, invest money. Nothing complicated. One day, his grandson asked him,
"Grandpa, where should I invest my money?" Zaid smiled. Without hesitation, he answered, "Stocks. Because that's what everybody talks about. Stocks are exciting. Stocks make headlines. Stocks create millionaires." So his grandson bought stocks. And at first, everything looked great. The market was rising. The portfolio was growing. Money seemed easy. Then, suddenly, everything changed. The market started falling. A little at first, then more, then even more. Every day felt worse than the day before. The grandson panicked. He called Zaid. "Grandpa, what's happening?" Zaid turned on the news, and that's when he heard it. The bond market is sending a warning signal. Zaid froze, because even after decades of saving and investing, he realized something shocking. He didn't really understand bonds. To understand bonds, forget Wall Street. Forget fancy financial terms. Imagine your neighbor knocks on your door. He says, "Zaid, I need $1,000. I'll pay you back next year, and I'll give you an extra $50 for helping me." You think about it, then agree. What just happened?
You became the lender, your neighbor became the borrower, and the agreement became a loan. That's all a bond really is, a loan. When governments need money, they borrow. When corporations need money, they borrow. When cities need money, they borrow. And when investors lend money to them, those loans are called bonds. That's it. Nothing magical, nothing complicated, just a loan with a promise to pay interest. Now, Zaid started wondering, if governments can print money, why do they borrow? Great question. Imagine a country needs money for roads, hospitals, schools, military spending, infrastructure projects. The government doesn't always have enough cash available immediately, so instead of raising taxes overnight, it borrows money. Investors buy government bonds, the government gets cash, investors receive interest. Everybody wins. At least that's the idea. And because governments are usually considered safer than businesses, government bonds are often viewed as some of the safest investments in the world. At first, bonds sounded boring to Zaid. But then he discovered something incredible, a secret rule that controls financial markets. Let's say you buy a bond paying 2% interest. Everything is fine. Then suddenly, new bonds start paying 5%. Now think carefully. Would investors want your old bond paying only 2%?
Probably not. Why accept 2% when 5% is available? So something happens. The price of your bond falls. This creates the most important relationship in the bond market. When interest rates go up, bond prices go down. When interest rates go down, bond prices go up. This relationship sounds simple, but it moves trillions of dollars around the world. Zaid kept learning. Soon, he discovered another powerful player, the central bank. In the United States, it's called the Federal Reserve. When inflation becomes too high, Federal Reserve often raises interest rates. Why? Because borrowing becomes more expensive. People spend less. Businesses borrow less. Economic activity slows down. Inflation cools off. It sounds simple, but there's a side effect. Higher interest rates hurt bond prices, and higher rates often pressure stock prices too. Suddenly, Zaid realized something. The stock market wasn't moving randomly. There was a reason behind the chaos. Most beginners think stock prices only move because of company performance. That's only part of the story. Imagine you're an investor. You can buy stocks, or you can buy bonds. Bonds only pay 1%. Stocks look attractive. Bonds suddenly pay 5%. Things change. Many investors start moving money into bonds. After all, why take stock market risk when safe bonds pay decent returns? Money leaves stocks. Stock prices fall. This is one reason markets often struggle when interest rates rise. And suddenly, bond market starts influencing everything. One evening, Zaid was reading financial news, seeing the phrase, bond yields are rising. Most people ignored it. Now he understood. Bond yields aren't just numbers. Signals about inflation, signals about growth, signals about investor expectations. Professional investors watch these signals constantly.
Because they often reveal problems before everyone else notices them. It's like seeing dark clouds before a storm arrives. Then Zaid studied history, especially the 2008 financial crisis. Before the crisis exploded, there were warning signs. Debt levels were growing, risk was increasing, financial markets were becoming fragile. Many people ignored the signals. Some investors paid attention. Those investors understood something important. Financial disasters rarely appear without warning. Clues are often hidden in credit markets and bond markets. That's why professionals pay attention. By now, Zaid had learned something surprising. Wealthy investors don't just watch stocks. They watch bonds every day because bonds help answer important questions. Will borrowing become more expensive? Will the economy slow down? Will inflation rise? Will businesses struggle? Will stock valuations fall? The bond market often provides clues before the answers become obvious. That's why many professionals call it the smartest market in the months later. Zaid sat with his grandson again. The grandson asked, "Grandpa, what's the most important thing you've learned about investing?" Zaid smiled, then answered, "When I was younger, I thought stocks were everything. But now I know something different. Stocks get the attention. Bonds control the game." The grandson looked
Confused. Zaid continued. If you understand bonds, you understand interest rates. If you understand interest rates, you understand borrowing. If you understand borrowing, you understand businesses. And if you understand businesses, you understand money. The truth is, most people never learn how the financial system actually works. They chase stock tips, follow headlines, and react emotionally to market moves. But the investors who understand bonds see a bigger picture. They understand why markets move, why borrowing changes, why economies expand, and why economies struggle. So the next time you hear someone talking about bond yields, interest rates, or government debt, don't ignore it. Because understanding bonds isn't just about investing, it's about understanding money itself. And once you understand that, you'll never look at the financial world the same way again.